Chip stocks climbing today as the overall market looks to rebound from the recent sell-off. Still, the S&P semiconductor ETF down more than 15% this year, amid investor concerns about AI demand and the impact of potential chip export controls. Joining me now with more, we've got Jonathan Krinsky, BTIG's Chief Market Technician. Jonathan, great to speak with you here. Let's just start on the context for our audience. What changed in the semiconductor sector to lead to some of the pressure that we have been seeing?
Well, good to be here. If you look at the semis, really on both an equal weight and cap weighted basis, they really were in a pretty wide trading range for most of last year, despite the AI hype narrative. And so as that was happening, the relative strength versus the S&P was beginning to deteriorate. And, relative strength often precedes absolute performance. And that's, clearly what happened. So you just didn't have any momentum or relative strength. And that led to a bit of a breakdown, with the broad market in the last few months.
Yeah, and I know that you look at the technicals as a CMT. What might be a level or an indicator of a bottom being hit that could lead to some more movement to the upside in chips?
Yeah, so we've been looking, both in semis and across the broad market, some downside exhaustion levels. Obviously, there was a lot of eyes on the 200-day moving average for the S&P. We felt there was maybe too many eyes on that, but then the second break, we think probably is more a better buying opportunity, which is where we're at right now. You're starting to see some elevated capitulatory signals on the volume side, on the put call ratio. It's certainly not levels that we've can't go higher or can't get more oversold, but I think we're down 9 or 10% from the highs. If you're looking for an opportunity for a trade, I think this is the entry point. Bigger picture, there's probably more concerns, but I think the next 3, 4, 5% should be higher, not lower than here.
And just to stick to chips specifically, what do you think leads to more of the action that we're seeing today? Obviously, today is a little bit of a move to the upside in a lot of these chips names, but what technically are you seeing that indicates that rally is going to have legs?
Same thing. It's just, you get to a point where, momentum kind of and sellers kind of exhaust themselves to the downside. And even in bear markets, and we're not saying this is a bear market, but if it does turn out to be one, or even more of a deeper correction, you do get some pretty vicious rallies. So you want to be mindful of those oversold conditions, and if nothing else, maybe wait for a bounce before looking to sell again.
And I wonder, too, if you can talk to me about what you're looking at when it comes to NVIDIA specifically. Obviously, the chip giant in the room, a lot of selling pressure that we've seen on that stock year to date, those high earnings expectations being a challenge for them as well. What are the technicals telling you about how long a possible bounce back on NVIDIA could last?
Yeah, similar idea. It kind of traded sideways for much of last year in a trading range, and it's kind of broken below that a bit. So there's a lot of buyers that probably would like to be made whole, and so I think that's the issue. If you do get that bounce, they're back into the 2024 trading range. That's going to represent decent resistance. So I think we'll get a bounce, but again, you got to watch the magnitude and how the bounce responds into that resistance zone. If that fails again, that's indicative of probably a more substantial, larger top.
All right, Jonathan, we got to leave it there. Thanks so much for joining us.
Thank you.